traders at Axis Bank expect Nigeria's money market to remain weak as local players continue to sit on the sidelines amidst the thin levels of liquidity. Akpevwe Oputu, fixed income dealer at Axis Bank, joins me for more on this. Thank you so much for taking the time out to join us today. This liquidity levels at the market still persistent. I've spoken to a number of traders on this, I mean, the answer is still the same. We're just going to have to wait and see how this plays out. But I'm asking you now, what could potentially change this?
All right, good afternoon. Thank you for having me on the show. So we think that if we currently have more OMO maturities coming to the system and NTB auction matures into the system next week, that would help to improve on the system liquidity. And we expect that the retail refund from the retail SIMS that was conducted last week will be paid back into the system, and that will actually help to boost the liquidity that we see in the system currently. Right now, we've seen the market trading around 15 levels, 15.75% levels on the OBB and overnight trade, but that has remained relatively stable as banks just try to fund their daily obligations in the market.
Okay, now looking back to activities right from Monday up until now, how would you characterize the highlights that the market has experienced this week in terms of how investors have played at the yield curve?
Okay, so the market has traded relatively flat this week on the Treasury bill space. We haven't seen a lot of activities in the market, despite the OMO maturity that came into the system on Tuesday for about 30 billion, and the OMO auction that was conducted yesterday, about 17 billion of that was sold to mop up this liquidity from the system. We didn't see a lot of subscription at the auction, and this is due to the liquidity play out in the system. So we've seen a lot of banks shy away from the OMO auction due to the low liquidity in the system. Despite this, the rates have actually remained stable. The 89 days closed at 7%, the 180 days closed at 8.5%, and the 348 days remained at 10.1% levels. But at the secondary market, we've seen yields trend a bit higher due to the illiquidity in the system. So we see banks offering their securities at higher levels, around 9.6% levels on the long end of the curve. And same as in the bond space has been trading flat all week, and despite the improved offers on the belly of the curve on the 35 and the 36 bond securities, we haven't seen a lot of transactions consummated on the secondary market, and this is actually due to the illiquidity that has persisted in the market for so long.
Okay, now for the secondary market, for both the treasuries and the bonds, if this persists into the new week, can we see or can we expect rates to significantly increase?
Okay, so we'll still see rates trending higher in the secondary market, maybe a 10 basis point movement from where they closed this week, because the illiquidity pressure is across the system, it's across the banks. So you see a lot of people willing to sell off on their bonds and very few buyers, and that means very few trades will be consummated. So you don't expect to see a jump in the rates movements across the yield.
All right, now just quick thoughts from you on the NAIRA, how the NAIRA has performed against the dollar this week.
The rates have been relatively stable in the ironing window. We've seen the NAIRA depreciate about 0.5 kobo yesterday to close at 411 Naira to the dollar. So we've still seen a lot of demand in the secondary market in the FX space compared to the supply that you see in the market. So despite this, we've just seen it relatively stable around 411 Naira in the market. So not much has changed from where it was opening the week.